All right, good morning, good morning. It is 6:30. It is September 18th. It is a new week. I hope everyone's feeling well. Still can't get this whole technology thing done where I can interact with you guys on Twitter like I used to, but you know what? It's getting out there and hopefully help you set up the day a little bit. And if you want to actually interact, I'm having a free week on the Alpha team if you want to come in and hang out with probably 500, 600 traders from around the world. You can probably see the link in my Twitter. Either way, hopefully everyone had a good weekend. My name is Scott Ruther. I'm the Chief Strategic Officer of T3 Live. Again, this is the 6:30 Club where I try and go over some things I'm thinking about for the week, what the narrative is, where we're focusing, what the complexion of the tape is, and some things that will be coming out this week. So with that being said, everybody knows we got the Fed coming out on Wednesday. I think no one's really expecting them to do much. If you look at the Fed funds rate, it seems as if finally the street's thinking a little bit that higher for longer is going to happen. So there's a little less probability of a full point cut in 2024. So I don't know exactly what that means, except for the fact that unless this market really falls apart and the economy falls off a cliff, it's going to be hard for them to cut rates. So anyway, with that being said, last week was definitely a little bit of a tricky week. What do I mean by that? Well, we had this wedge type formation on the market, right? If you look here, it looked on Thursday as if we were ready to break above it. So here's where the market got really tight, right? And it looked like we were going to break above this wedge formation. And then all of a sudden on Friday, boom, you had a big wide range bar that if you are active and if you are long, chances are you got stopped out of a bunch of things on Friday. The semis broke its wedge first, led tech lower. There are definitely some actively bearish things that are adding up, but still the market's not falling apart. So I got to be a little careful just trying to be short, but again, it also gives, you better be careful being a little long too, because this 2-week time period that everyone's talking about is historically a weaker one, so you don't want to get caught. So with that being said, take a look here again. So I would say if the active bears have any power, they don't let the market get back above 44.79, then at some point get below 44.50, and then you have the low here of 44.30, and then here's 44.14, which was where we kind of broke out from in this descending trend line. So we'll see how it goes. There's always clues out there, right? If you look at the Qs, what I would say this. Okay, I'm actually short some Qs overnight. It's not down much. There's not a lot of follow through. If the active bears want to keep control, they don't let the Qs bounce back and reclaim this 370, 390 area. Otherwise, it's just a choppy mess. Here, too, looked like on last Thursday that we'd be heading towards 380, and then all of a sudden, boom. Some think it was option expiration. Some think that, again, it's just predatory action the way this market's been. We'll see what it's like. We'll see, like today, if we have a quiet day, and then it continues lower tomorrow. That would be the MO of the market. They always want to try and mess with you a little bit. So again, a snapback towards 370, 390, chances are, that's where the active bear has got to come and make a stand. And who knows, it might not even get there. And then if it goes red fast, then Friday's low is 369.86. Okay, and that's that. The SPYs, all very similar. Had an inside wedge. It was pretty exciting coming into Thursday. Looked like we were breaking to the upside, even with the poor macro. I remember that day, Chillo from the side, and people are like, rates are going up, and this is, why is the market not caring? I guess let's just look at the action of the market, and then all of a sudden, this, candle happened on Friday, taking out all the moving averages, and I think most people reduced risk. Some people probably coming in short today, and now you have to have a little patience. Same thing with the Qs. If you do get some kind of bounce back, can active sellers reject price at 445.08, right? That would be probably half of this candle where you would set up and do an H cell setup for more downside. So, we'll see. Small caps, definitely hard last week also. If you remember earlier in the week, everyone's like, oh, look at that head and shoulders pattern in the IWM. And then on Wednesday, I think a lot of people went out short. And then on Thursday, the IWM was up like 3 points in 4 minutes. It just showed how many people were off sides. And then it got weaker again on Friday. So it's pretty choppy. Here's that head and shoulders top pattern. And you can see that within just a longer term channel, it's just doing a whole lot of choppiness. Sometimes markets are choppy. Sometimes you have to be in a range for a while, right? We were in a huge bull market for a decade, so you get 2 years of sideways action in the S&P, and things consolidate. Obviously, they're trying to squeeze the excess out because of inflation. So with rates rising, we have to get used to where they're going to be for a while, right? Higher for longer, and that slows down the economy, and then you have to figure out what the PE of the S&P is supposed to be, et cetera, et cetera. I'm not going to get into that whole thing, but all in all, very choppy here too. I know a lot of people were short there, and then all of a sudden looked at, oh, they trapped them. Oh, they trapped them. Lots of traps. So if you're getting trapped, do a little less. Try not to get too trapped. It's not fun being trapped. I feel like I've been a little chopped up myself, and I've been doing this for 23 years. So if I'm having a little bit of trouble finding, follow through or whatnot, I'm sure you are as well. Unless you're just shorting when they look great and buying when they look bad, and that's not a great way to trade. That means we're in a range-bound, crappy market, but with some things to do. But anyway, so what's going to give us some clues to this week? So like I said before, on Friday, the SMHs, okay, SMHs, broke this wedge to the downside. Okay, looked tight. Remember, we were going over this on Wednesday. It looked like maybe it can go to the upside, and then pow. So in order for the bears to stay in control here, they'll probably want to reject any bounce back. So you have a bunch of levels here, right? So this would be one spot that the bears would want to reject price out if they tried. This 148.50 to 149, and then if they want to keep the pressure on and stay a little bit inside, then it goes below here, continues to the downside. Okay, Apple's up a little bit this morning. Let's see. This is very important probably for this week, right? Apple, if you take a bit of a broad look, you had it's been in a sequence that was very strong before breaking right before earnings. It broke the 8-21 day, and then that was the gap lower. Filled the gap, all the China news came out, blah, 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 and now all of a sudden it's still just hovering here. So my thoughts on this: if we're going to get downside follow through in tech, Apple's going to have to break this spot. Not saying it's going to, I'm saying if the bears are going to growl very loud, then chances are this spot gets broken. If this holds and it wants to bounce a bit, towards the 8th day, then it's going to probably be choppy because it's going to be hard for the markets to go down if Apple wants to bounce a little bit. So 173.55 is like a key support, and then you have 171.96. If this were to break, and just say if this stays, you could probably draw this like this, below this spot, chances are, market's not going to like that. If it gets above 176.50 and wants to retrace a little bit higher, then it's just going to, then you're getting a broken bounce-ish, and the market's going to hang around here, and it's not going to be that interesting. NVIDIA, remember that? I was talking to you guys earlier last week. This broke the 50-day. Okay, you had a few decent trades off the 50-day, and then finally on Thursday, it broke below this 451, broke below the 50-day, and hit a low of 438.08. So if it's going to get downside, a few things could happen today. They could try and come and get more downside follow through, right? Or it could break below and come back above and do a little red dog reversal buy, meaning like just a quick active day trade. So we'll see. But all in all, most people either got out of the way or got short at 451 or maybe even around here. And if you went home short, I'm not exactly sure what it's doing this second because my system isn't quite up. But we'll see. So this will give clues. If all of a sudden this breaks 438 and heads down into this quadrant, which it could, then obviously it's going to be a risk-offish type environment. We did make some money with some longs last week. Okay, Tesla was fantastic. So the question is, can Tesla continue to hold up? So we'll see, right? So this is a bigger look at Tesla. Came all the way back to this gap area, held in while a lot of the market sold off on what's it called on Friday. So we'll see if that continues. Can Tesla hold 271? If it doesn't hold 271, you could definitely see a move towards the 8th day. I'd love to see this kind of hold up so when the market goes, we have some kind of leaders or something, but we'll see. At this point, sometimes they hold up until they don't, right? So we'll see if it holds up today. So if it were to give you an inside candle, That'd be nice, because then if the market does get its footing, perhaps it takes out 278. All in all, it was a decent week last week. Also, Google is on the stronger side, where it hung out here, didn't really break. If it were to hold this, just say 136-ish, and continue to the sideways while the market's correcting, as soon as the market takes off, I would think this would again show some leadership. And you have to be careful, because one day these things look good and the next thing they're getting hurt. Like Microsoft's been a choppy mess. Like, look at this chart of Microsoft. My goodness. Here it looked like it was going to break out, and then boom, they trapped you. Okay, then it looked like it was going to break down, and then boom, they trapped you the other way. And then you had a doji to break below. That's not easy action. Okay, that's very choppy, continuous. So where is it now? So I don't know. I guess see if if this should continue to the down. At one point, just break. If it's going to go. Let it break. But we'll see. This low here is 329.65. 329.65. So that is right here. I guess that's a kind of a support spot too. But all in all, this is just hard. Looks like it's going to break out, then gets hit. Looks like it's going to go down, and then they rally it. Meta was even worse. Like, if you look at this Meta, holy cow, what a pain in the ass this stock's been. I'm just avoiding it now because it's so bad as far as continuity. Like, the same thing happened here. Like, look how many times it tried to break above this like 305-ish area, and just loose wide, just pain in the butt. And finally, looked like it was going to go, and then this candle just took it all back. Can't really make this stuff up. Sometimes there's great action, and sometimes there's like, whoa, just let it be, right? That's what's going on there. So anyway, with that being said, it seems like the thesis around the world is that we're getting close to stop raising rates, but it's going to have to stay higher for longer to combat inflation, because inflation is sticky, energy prices is still high. So you go to the supermarket, you're spending $250 for a whole lot of nothing. So they still have some work to do there. So with that being said, how does the market handle it? So at this point, today's only Monday. We did get that break, like I showed you, in a lot of things. I would say be careful today. Do we get some downside continuation? That'd be better than bouncing back, to be honest. And then we'll see where we are a little bit closer to Wednesday. There's really not a whole lot of great stocks that are trending well. We could buy high and sell higher. It's a lot of range bound, little red dog reversal for a trade. There was a great trade in ARM, but guess what? There was one trade. Actually, there was 3 trades, but then you just had to get away from it. So if you find yourself making money and then you're losing money going back to a trade, just don't do it. If you look at ARM is, ARM actually I did pretty well with. Okay, you go here. We played the first move, and then there were like 3 moves to play, right? This was the first move above 50. Remember, I went over this trade, the art of the IPO. So first trade was buying it over 58, went to 62. Next trade was when it consolidated. You could have bought right around here, added one above 62, went to 69, or whatever one, 66.28. And then, you could have taken it home overnight for some follow through, and it was up 4 or 5, and then I sold mine, and I didn't trade it again. Look at this choppy mess. All of a sudden, going sideways, broke below. And, so it's like sometimes there's a setup where you can make your money, and if you traded well, and then you think you can get more setup, sometimes it'll chop you up, and that's what I find myself with some of these other names. I find myself sometimes, at the high of my day by 9:50 because the setup I wanted happened, and then the rest of the day, it's hard to gauge, and it's just a choppy mess. So the moral of the story is, if you get paid for a living, net money. And if you're if you're over trading, stop it. And if you're looking for a trending market, we're not there. We're still trying to figure out what's next here. So with that being said, a little less is more, and just conserve your brain power, so when things show you that it's ready for active action or an active sequence that can last for multiple weeks, you're not too fried. And with that being said, come join the Alpha team for the week. It's free. Why not? And see what we do, how we do it. Learn a little bit. Learn about the process, because for me, it's not about me force feeding you stocks and watching me trade and this and that. I will be trading when there's the right time to trade. It's more of what am I doing every day to get prepared for the day? How have I been doing this for 23 years? And it's because of my routine and my process. You have to like your routine and your process. You have to know, how to burn off a bad day, not get too excited on a good day. You need to be able to feel good so you can execute on your game plan and just move along. I love my process. I'm up every day, 4:45-ish, in my sauna, sweating it out, whether I had a few drinks the night before or not, still sweating it out for about a half hour, and then I'm going to my ice barrel, which I'm a big proponent of the ice barrel. I've had it for a year. My friends got it for me for my 50th birthday. I haven't missed a day. And then all of a sudden, you're ready to go for the day. And then I'm coming here by 6 o'clock-ish, and then 6:30 I'm doing this, and then by 8 o'clock I've already marked up about 30 different charts, putting actionable thought process on them. Then I do my morning call, and then it's around 8:40 I stretch my legs, and then we do another video with the alpha team, and then get ready to trade the day. And by 11:30 I'm a piece of jello. My brain can't think anymore, so what do? I get off the desk and I go do a small workout so I can come back at 2 o'clock and trade the close, do my recap, and then go home and spend some time with the family. And then rinse, repeat, and if you're rinsing and repeating something you don't like, then you better change it up. With that being said, again, what's this arm? We'll see what Apple does today. Apple seems a little bouncy this morning. Can it hold up or not? We'll probably give you some clues to the day. 176.50 is that high. It gets above here. There's your 8-day. So I think that's going to give some clues. But either which way, take it slow. Fed is on Wednesday. Market's in a little bit of no man's land. We're not oversold. We're not overbought. And we had Thursday, Friday little melees where it looked good and they trapped. And then today, there's not a whole lot of follow through either which way. So you'll have to be patient. Later, guys. Thanks for tuning in. I appreciate you.